futures.
Welcome back. Well, we are seeing a wee bit of recovery in the markets. So let's talk about what's taking place in the F&O end of things, more so because it's weekly options expiry today. There has been a sharp fall from highs across all the indices, no two ways about it. But this week, what really stood out was the weakness that we've seen in erstwhile outperforming indices. What were those erstwhile outperforming indices? The mid-cap index this week is down 2.7%. The Nifty Bank is down 2.1%. The Nifty itself is down just about 1%. The other indices that did well was the PSU Bank Index, which has been the star of this year, down 5% this week, and the small cap index is down 4.5% as well. With the decline in today's trading session, the Nifty has fallen below the 50-day moving average. This is a mark that it was holding on earlier itself, and the Nifty Bank as well fell below the 20-day moving average yesterday. So what does that mean in terms of where the market is likely to end today's expiry with? There are a lot of call writers pinning their hopes on the Nifty not going past that 18,200 mark. The 18,200 call as well as the 18,150 calls have seen the most amount of open interest build up, and with higher India VIX, these premium eaters have a fair amount of firepower with them as well. So levels upwards of 18,200 may continue to pose some sort of resistance. There you have the 18,150 call, almost a crore shares added in open interest. 18,100 put as well as 18,000 put, both of them come into play as well. Now more so because the Nifty is above that 18,100 mark. The premium on 18,100 put is 42 odd rupees. So that's telling you that levels around that 18,060 would be an important support, and 18,000 is a psychologically important mark. For 11 rupees, the street believes that maybe this is another mark that will hold on as well. So support between 18,000 to 18,050, resistance upwards of 18,150 to 18,200. Does that tie in technically? Pritesh Mehta joins in as well. Pritesh, your thoughts?
Now see, if you look at the screen, it looks scary, but we are just off from 800 points from the peak. It doesn't even matter, 800 points correction. And the way I'm looking at markets, the customized spread that we follow, it is an oversold zone. So this is the right time we should be thinking of creating shorts. In fact, we should be looking at a list where we can start buying now. So 7950, 18,000 is a zone which I'm keenly looking out for, because I think this market will try to hold around the support zone, and then we can see recovery kicking in. But again, not a right time to create shorts. And the way I'm looking at it, there are specific sectors which are showing strength. So we should be focusing on that rather than getting carried away by the decline that we have seen in last few weeks.
Okay, and Pritesh, what would your individual technical picks be?
So see, as I mentioned earlier, that we should be focusing on the sectors which are showing strength. So Nifty PSE basket, this index has come down from its peak. But yes, if you look at the broader structure, it is still holding on to the strength. It is still holding on to positive bias. So I feel there is opportunity in this space. When we look something like IOC, HPCL, they are giving us an opportunity to create longs. And I'm talking about 15-20% more on the upside. So yes, there is opportunity in this particular space. And apart from that, when I look at my customized insurance index, it is holding on to lows for last few months now. So there is an opportunity kicking in this particular space as well. So, something like SBI Life looks very interesting. We can talk about, once market stabilizes, this stock can easily give a return of 15 to 14% in next few weeks.
Oh, okay. Well, SBI Life, to put it into perspective, is up around close to 1% at this point. It's given returns of around 4% on a year-to-date basis, and is down around 3% on a month-to-date basis. Pritesh, thanks very much for joining in and giving us all of your stocks and what you're tracking today. We need to take a short break, but full tilt on Ajanta Pharma, that in fact is reacting to news updates. We'll get you more after a short break.